Hey everyone, Mike Rosehart here, talking to you today about the tax-free savings account, or the TFSA, or the TFSA, which is in Canada one of the most powerful vehicles that we have. It is the ultimate. If you do not have a TFSA, you should open one now if you're over the age of 18. If you're not investing and holding equities or interest-bearing instruments within your TFSA, you need to get on that. I'm going to explain why. So what is the TFSA, or the tax-free savings account? And, apologies guys, I'm going to read you the exact definition because I don't want to screw it up. The tax-free savings account, or the TFSA, is a flexible, registered, general-purpose savings vehicle that allows Canadians to earn tax-free investment income to more easily meet lifetime savings needs. The TFSA complements existing registered savings plans like the Registered Retirement Savings Plan, RRSP, and Registered Education Savings Plan, RESP. And there are more. There's the RDSP as well. And there are variations of the RRSP, like the LIRA, that we're not going to talk about today. Or a RIF, which are over your age of 71. We're not going to talk about today. We're going to focus on the TFSA. So tax-free savings account allows you to do tax-free investing. Oh my goodness, guys. Tax-free investing. You can invest in anything. You could buy Bitcoin, you could buy penny stocks, you can make $1 million in your TFSA in Canada, and you do not have to pay $1 of tax. None, zero. No income earned on your investments within a TFSA are taxable. There's no income. You don't pay any, or there's income, but you don't pay any tax on any income earned within a TFSA. What are some of the rules? You have to be 18 years old to begin to contribute. How much can you contribute in TFSA? Well, it's an annual amount set by the government. So in 2009, when the TFSA was created in Canada, there was a $5,500 a year limit. You can only pay up to $5,500 per year in the TFSA. However, it's a cumulative total, which means that each year, as you age, essentially, every year over 18, you get to add an additional amount for the following year. So if you were 18 years of age in 2009, you would have $57,500 in contribution room you could throw into it right now, assuming you've never used the TFSA before, you've never contributed to it before. All contributions to the TFSA, unlike the RRSP, which uses pre-tax income, are after-tax dollars. So you've already paid tax on the money you're contributing into your TFSA. Anything you earn on that is then tax-free. Any income, any growth, any capital gains, any interest income. And because capital gains are half taxed in Canada, which means half your marginal rate tax, half inclusion rate tax, which means if you make $100,000 in capital gains and you're at the max tax bracket of 50%, a $100,000 gain means $25,000 is eligible to be included, to be taxed. So people think capital gains tax is nasty. It's actually one of the best ways to earn an income. It's the best way to earn income in Canada is through capital gains because it's taxed at half your marginal rate. So if you pay 40% tax, it's taxed at 20%. So when you're using your TFSA to its max benefit, you might be investing in things like REIT distributions or do some lending through your TFSA because interest income is considered 100% business income. So you'd want to leverage and maximize your TFSA to earn income that is the least tax advantage, the most tax disadvantage, because it's immune inside your TFSA. So I like to use my TFSA for lending, investing in things like REITs, because that type of income is tax disadvantaged. So you want to hold those type of instruments within your TFSA. A big myth, people think that your tax-free savings account is a savings account. It is not a savings account. You should be opening up an Interactive Brokers or a Questrade or one of these DIY brokerages. Actually, any brokerage would allow you to open a TFSA, a registered tax-free savings account, and you can invest within your TFSA. So all your stocks and equities or instruments, whatever you're holding, debt instruments, whatever you're holding in there is tax-free. So don't use an open margin account with your brokerage. Use your TFSA to trade and buy equities. Really smart thing to do. Optimize. Other key points to note, it doesn't affect income, like I said. So if you're collecting, for instance, Canada Child Benefit, and you have a number of kids, and the government gives you $533 a child because your income's low enough, growth in your TFSA doesn't affect that at all. If you're on a income assistance program, doesn't affect things at all. If you're on the other side of the spectrum and you're retired, doesn't affect CPP, Canadian Pension Plan, doesn't affect old age security, doesn't affect if you're for instance, you have to pay alimony or something, or child support. Doesn't affect any of those things. It is immune. All income earning your TFSA is immune. Which is why it's a really awesome vehicle, superpower. Anything you withdraw from your TFSA can then be put back, assuming you have the room and the limit. If not, you have to wait to the January 1st of the following year, in which case you can put all of the money back the next year. Losses are not tax deductible. That's a downside of the TFSA. So if you lose all your money in your TFSA, you can't write that off. It's a complete loss. It's as if it doesn't exist. It's to be fair because all the gains you get are also not taxed. So why would you get a deduction for losses? No age limit max. So an RRSP expires at 71. You have to roll it over to a RIF and begin withdrawing minimum amounts per year. You're forced to withdraw from the RRSP. The TFSA, you are not forced to withdraw. You can keep that open till unlimited age until you die. Another cool thing too, it'll roll over to your spouse tax-free, which is really sweet when you die or when you pass on. No minimum withdrawal is really, really key too. You're not forced to do anything. With the RRSP, you are forced to do some withdrawals. There are limits. If you withdraw from your RRSP, which you can do whenever you want, I'll talk about that in a future video of why I've withdrawn from the RRSP to basically, I control my income using my RRSP. But if you withdraw from your RRSP, you lose that limit forever. You can never put it back in. The TFSA, you can put it back in. I'm gonna walk you guys through a really potent, a really disgustingly amazing example of how powerful the TFSA is. And I'm gonna do videos on future strategies about how to do an RRSP melt into a TFSA. Something really cool you can do to grow your TFSA to $1 million limit. Because you can grow this 57,000 limit. There are people right now in Canada with $1 million limit on their TFSA. They have $1 million in their tax-free savings account that is 100% producing income and they pay no tax on it. It is very scary for the federal government, I am sure. But right now, let's say you invested over the last 8-9 years that the TFSA has been open, and your $57,500 that you've contributed has grown to $250,000, right? Because you've invested in the if you actually invested and you followed it in things like penny stocks or even the S&P 500, you should have about $150,000. I think if you invest in 2009, you have about $150,000 to $200,000 in your TFSA if you just bought the S&P 500. So something to think about there. Really, really potent, a power to grow your TFSA, say $250,000. In the long term, in 10 or 15 years, if we keep growing inside of our TFSAs, Canadians are gonna have a whack load of money in their TFSA, and I don't know, the government's gonna clamp down on that, but the nice thing is, if you already have that amount in your TFSA, you've already grown your TFSA, usually the grandfathering rules will apply, so they will allow people who already have certain amounts in their TFSA to keep those amounts in their TFSA growing tax-free. The government tends to do that, so take advantage of the TFSA now while you can. A downside of the TFSA, most people don't realize this actually happened to me before, was let's say at $57,500 you invest in penny stocks and it's worth $5,000 and you have to sell, or the stock gets delisted, or it gets listed down to a venture or something, or a pink sheets, and when it trades in pink sheets you can't hold it in a registered account, and so you're forced to sell. This happened to me, a company got delisted and I was forced out of the company. And let's say you have $5,000 in your TFSA. That's your contribution room forever. If you have $57,500, it goes down to $5,000. You've lost $52,500 in TFSA room forever. That's gone. You have to earn now with that $5,000. You have to earn all of that income back, and it's very hard to earn back to go from $5,000 to $52,500 or $57,000. Sorry, what you were at before. It's hard to go 10 times up. Losses are felt twice as hard as gains are. So something to really consider, guys, is that fact, right? That the TFSA is a really awesome vehicle, but you don't want to be taking a huge risk with it because you can lose all of the contribution room and lose the power of the TFSA if you're investing in really risky type of equity. So my recommendation would be, this is just my high level opinion and just my opinion, but I think you should hold debt instruments inside your TFSA. So you should be holding, and also you could hold equity investments that are treated very poorly, like business income. So REITs, for instance, pay distributions that's treated like full business income, not capital gains tax. So some of them aren't eligible dividends. Non-eligible dividends are one that you can be held in here as well. Bonds and interest-bearing instruments. If you do private lending, you can lend your TFSA to people against their mortgage, register a mortgage against their property. Really, really cool vehicle to earn income tax-free. There you have it. That's the tax-free savings account, guys. If you enjoyed videos like this, please let me know. At the end of the day, I'm here to help you guys get to 25 times your annual expenses so that you can be free too. I want to help you spend less, earn more, and maximize your returns. Because at the end of the day, you can be your richer self if you apply these principles. Cheers.